Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to the February 28th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll with help from the EverAg Insights team. What we do here is break down the latest from the NDPSR report. Let's start with butter. This butter number coming in at 277.07 is a plus 5 to the CME 1 week average of 272.40. Good volume here on the NDPSR to coincide with that nice basis. Plus 5 is of course well above our expected 2-cent positive basis, and here at 4.8 million pounds, well above our expected 3.5 million. We did trade 24 loads on the CME last week, so that should help a lot. All in all, in terms of both price and sales volume, I'd have to say that this is a win for the manufacturer in butter. Next, let's move on to the cheese complex, where the story is not as rosy. This block number coming in at 165.02 represents a plus 4 to the CME 1 week average of 161.05. Now this 161.05 CME weekly average is 1 week off of the high week at the CME. That was of course last week. Last week on the NDPSR, we had negative basis. That February 17th release of 162.63 was negative to the CME weekly average, that high week. And this week basis recovers a little bit. The CME weekly average moved down 3 and the NDPSR up 2.5. So we had a basis recovery, and that's how we end up at that plus 4. So basis moving around in the block, what is consistent is dismal volume. This volume now, under 11 million pounds, 4 out of the last 5 weeks. And at 10.1 this week, call it a full 2, almost 2.5 million pounds our expected volume level. So this block basis this week at plus 4 is a nice number, but at that number the manufacturer sacrificed sales with total volume falling well below. It's interesting that on this cheese rally, the block has gone from trading at a 10-cent premium to the barrel to where it stands today, or where it standed earlier this week, at 10 cents under. So the rally in cheese at the CME has come at the expense of the block. In barrels, 159.24. That is a plus 1 to the CME 2-week average of 158.17. Plus 1, that's well below our expected basis. We expect typically a 4 to 6 cent positive basis. Here the manufacturer had to discount to move weight, and similar to the block, was unable to move a whole lot of weight. Only 12.7 million pounds. So 800,000 under our expected 13.5, lower than expected basis. This is with 6 loads traded on the CME. So light volume at the CME, not a whole lot to point to there. All in all, for the cheese complex, disappointing price on anemic volume. Up next is the shining star of the dairy complex, dry whey. 49.79. That's a minus 1 to the CME 1 week average of 50.75, but just an outstanding price. 49.79, almost a full nickel over the February 10th NDPSR of 44.98. And at that elevated level, the manufacturer was able to move above our expected 4.5 million pounds, coming in at almost 4.7 million. The manufacturer called a 5-cent premium to prior week's NDPSR. So the prices at the CME are reflected here on the NDPSR as the whey complex continues to move higher. It'll be interesting in the weeks to come to see how the NDPSR reacts to the lower levels that we're seeing at the CME. I would expect that just as it behaved on the way up, the losses at the CME will be slow to get in on the way back down, as they were slow to arrive to the NDPSR during the course of this rally. And then lastly, Nonfat, 120.21. That represents a minus 1.5 to the CME 1 week average of 121.75. We traded 15 loads on the CME last week. So not a lot to add to the NDPSR volume. However, NDPSR volume looking pretty good here, coming in just short of 20.9 million pounds. If you go back over the last 12 months, the average NDPSR volume has been 20.2 million. The 6-month average, a little bit below that, coming in at 16.8 million. So whatever reference point you choose to use, this week's volume is a little bit above. So the manufacturer sacrificed price a little bit, taking a 1 1.5-cent discount to the CME weekly average, but was able to move a fair amount of volume. So we'll call it a win for the non-fat manufacturer. So this is week 4 of 4 for the February pricing cycle. February class 3 expired at 1608, with the February class 4 all the way up at 1985. If you carry current CME cheese non-fat whey CME equivalents out through the 5-week March pricing cycle, currently getting March class 3 17 even, March class 4 1980. We'll see what they have in store for us in the weeks to come. On behalf of Paige and the entire EverAg team, thanks so much. We'll see you next week. Bye.